Welcome to this explainer. Today, we're going to completely x-ray the massive corporate machine that is Zebra Technologies. You know, if you think you know this company just from the barcode scanners at your local grocery store, well, get ready to see a totally different side of their operation. We're pulling back the curtain on the whole shebang, from their boardroom strategies all the way down to their global supply chains.
But before we look at anything else, we've got to talk about this number. $1.495 billion. That represents their staggering first quarter 2026 net sales. I mean, think about that. Nearly $1.5 billion in a single quarter. It absolutely sets the stage for an incredible upward trajectory, proving their core business is just firing on all cylinders right now.
Okay, so here's our roadmap for today. We'll start with Zebra's financial performance, then move into stock moves and buybacks. After that, we'll look at how they're leading the AI frontline, dive into their 2026 board and proxy, and finally, navigate the tricky world of conflict minerals. So let's kick things off with Section 1, Zebra's financial performance.
Now, that massive $1.495 billion Q1 record, it's basically split between their two main powerhouses. We've got $825 million coming directly from their connected frontline segment, while Asset Visibility and Automation brought in a very healthy $670 million. What's great here is that they're seeing broad-based organic growth right across both of these crucial segments.
But honestly, what you should really take away from this is the 14.3% year-over-year growth. In today's economic climate, that is a massive jump. According to CEO Bill Burns, this growth essentially proves the market's heavy, durable demand for their technology, which is particularly driven by some real strength in the manufacturing end markets. Moving right along to Section 2, stock moves and buybacks. Flush with cash and clearly a lot of confidence, the board actually just approved an extra $1 billion for stock buybacks in early 2026. This adds to their previous programs and brings their total return of capital to shareholders to over $1.7 billion since 2019. This is a massive, massive signal of confidence to the open market regarding their future free cash flow. And Wall Street institutions are aggressively buying in. Just consider the Q1 numbers. Nordea nearly doubled their stake. AllianceBernstein, they increased their holdings by an absolutely staggering 1,310%. And Nordea Bank just initiated a brand new position worth over $134 million. Basically, they're scooping up massive amounts of shares across the board. But here's where it gets really interesting. We've got this fascinating contrast happening. While institutions now own over 91% of Zebra stock, we're actually seeing some recent selling from key insiders. For example, Chief People Officer Melissa Luff-Lloydsides and Director Janice M. Roberts have recently sold off portions of their holdings, reducing their personal stakes by about 11.9% and 32.6% respectively. So you have this dynamic tension between institutional hunger and insider profit-taking. Pretty wild, right? Let's transition over to Section 3, leading the AI frontline. Because you see, Zebra isn't just selling legacy hardware anymore. Not even close. They actually recently secured a spot in the Wall Street Journal's top 10 for AI readiness. They are rapidly transforming into a software-driven intelligence company, really capitalizing on trends like autonomous agents and collaborative AI. To make this happen, they're rolling out their frontline AI suite in 3 specific phases to digitize retail operations and really empower those frontline workers. First step, you have AI enablers, which provide on-device vision models and APIs. Next, we have AI blueprints. These offer real-world frameworks to basically automate manual tasks. And finally, there's the Zebra Companion. This uses generative AI to act as an on-demand knowledge and sales coach. I mean, imagine a retail worker instantly getting product specs directly in their earpiece. It's a real game changer. And as their VP of AI strategy, Yogesh Kulkarni, points out, this isn't some sudden pivot just to chase a trend. He says, for years, we've been embedding AI into our hardware and software, elevating outcomes for our customers and partners. So they've actually been quietly laying the groundwork for this AI revolution for years.
All right, shifting gears a bit, here is Section 4, the 2026 Board and Proxy.
The upcoming May 19th annual stockholders meeting is going to address some major structural steps for the company. Right at the top of the docket is Proposal 1, the election of 4 Class 3 directors. Now, this importantly includes their current CEO, William J. Burns, which keeps leadership continuity right at the forefront. Stockholders are also tackling Proposal 3. This is a brand new 2026 long-term incentive plan for executives, specifically designed to link their compensation directly to Zebra's financial performance.
And on top of that, they'll be voting on Proposal 4, which is about ratifying Ernst & Young as their independent registered accounting firm.
Now, the really crucial detail on that new incentive plan is that it specifically excludes an evergreen provision. Why does that matter to us? Well, it's highly favorable for investors. It protects shareholders from automatic, unapproved increases in the number of shares available for issuance. That basically means the board has to come back to stockholders and ask for approval before diluting the stock any further. Finally, that brings us to Section 5, navigating conflict minerals.
To actually physically build their industry-leading scanners and mobile computers, ZBRA absolutely relies on what are known as 3 TG metals. That's tin, tantalum, tungsten, and gold. Because these specific materials are heavily mined in the Democratic Republic of the Congo, the SEC requires strict, incredibly complex compliance mandates just to ensure that these trades aren't financing armed conflicts.
So, to comply with this, ZBRA conducts a massive, multi-step due diligence process to track these minerals all the way back to their source smelters. They start by identifying in-scope products, then they utilize standardized industry tools like the Conflict Mineral Reporting Template, or CMRT version 6.5, and they rigorously evaluate the data provided by their global suppliers. It is a huge undertaking. However, and this is important, despite all these extensive efforts in 2025, ZBRA transparently reported to the SEC that they simply do not have sufficient information from all their suppliers to guarantee that their supply chain is completely conflict-free. It's a stark reminder of just how incredibly difficult it is to have 100% visibility into deep-tier global manufacturing. Which leaves us with this final thought to chew on. As ZBRA continues to scale infinitely in the cloud with AI, and as their financial metrics soar, can they ultimately untangle the earthy, messy, physical complexities of building the hardware itself? It really is the ultimate challenge for the modern hardware-software hybrid company. Thanks so much for joining me on this explainer, and remember to always keep questioning the systems behind the technology.